Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally from a news-related or earnings announcement, it creates an opportunity for traders. And the opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet, and secondly, have a price reaction from in the other direction. So in the course, traders learn exactly how to calculate these specific price levels. They learn which stocks it works the best with and what are all the other criteria that we need to use in order to make these trades successful. All that's discussed in great detail in the course. The second strategy is the gap fill strategy. When stocks do gap higher or lower at the open, they leave what's called an open gap. At some point in the future, these open gaps will be filled. As part of the course, I give traders a tool to track them. Throughout the course, I teach traders how to trade them. Not all trades are created equal, so it does matter how a stock is coming in to fill the gap on whether or not it's a high probability trade. All that's discussed in great detail throughout the course. By the way, we'll get to the chart of GIMO in a second. It was a tremendous trade this morning. But the second thing I do is give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock Eastern Standard Time, 30 minutes before the market's even opened for business. Here's a copy of the email that went out this morning, and what you can see here is this one went out at 9:10 a.m. This was actually the second email that went out. And you can also see where it says update COST morning gap trades. This was an update on Costco because the stock price had changed since the email went out at 9 o'clock. So within 10 minutes, the entire trade changed. What happened was the stock took another leg lower. So we had 4 possible gap trades on the board today. 2 hit their levels and 2 did not. When a stock does not hit their levels, it's off the board. It's a no trade. We only want the highest probability trade levels we can find. So let's get back to Costco. You can see where I say gap lower, support levels are $158.68 and $156.64, and then another level at $154.37. Stop and profit target is about 50 cents to 90 cents. These are minimum profit targets. I go on to say, and this was the update that got sent out 10 minutes after the original email, the stock made another leg lower after the initial email was sent. Please note the additional price level added, which was the $154.37, and the $158.68 is now a high-risk trade even if the stock opens above that level, which may or may not happen. What did happen was the stock hit that level in the pre-market, and I never like to see that. That lessens the probabilities. It creates what we like to call a double dip. And we'll go over it when I look at the chart with you of Costco in a minute. The second one that hit its level, which you've already seen on the screen, was Gigamon, G-I-M-O, gap lower. Support levels are $40.27, and then I gave 2 secondary levels that didn't come into play. Stop and profit target is about 25 to 45 cents. Again, these are minimum profit targets. I also give a list of gap fill trades each and every day, but today we didn't have any of the gap fill trades fill their gaps, so nothing happened with this list, but we did have 2 morning gap trades that worked out fine. So let's go ahead and take a look at the chart of Costco and GIMO. We have already seen the chart of GIMO, so we might as well continue with this one. This is what I like to call a 4-leaf clover trade. This was a lucky trade in a sense, and I'll explain why. Not that the price level was lucky. The 40.27 is a good price level, but the way the stock traded was a little bit 4-leaf clover-ish. So the stock closed yesterday at $43.60. The stock was gapping lower in the pre-market trading. I was able to identify a level of $40.27 where the stock should find good support. And by the way, this is the same level that any trader that's taken the course at Lazy Gap Trader is able to identify, the same level at $40.27. I'll show you what I mean by a little bit lucky at the market open. Let's switch over to a chart that includes the pre-market trading activity. Now the data on the chart includes the pre-market activity, these red candles, as you can see, were the prices where the stock traded before 9:30 opening bell. The one I want to point out is the last candle, which had a low of $40.50. As soon as the market opened, you can see what happened. The print was down at $40.20, and the same candle, the same 10-minute candle, had a high of $41.60. Just 10 minutes later, or within the next 10-minute span, the high was $42 even from an entry point down at $40.27. So anyone that had an order in at $40.27, the stock had a little flash down there for a second and then ripped higher in the other direction, and just minutes later the stock was found all the way up at $42 a share. Now you could have taken profit, or traders did take profit along the way at any price they choose, and in the course I teach a strategy where traders learn how to take some profit along the way and let the rest ride, because we do get these runners that give us tremendous gains way in excess of the minimum profit target. So we want to make sure we book some profit along the way and that we can take advantage of the runners like this one that goes up $1.75 in a matter of minutes. Tremendous trade. All right, let's go over to the next one, which was Costco. We're staying with the pre-market data because I want to point out that the stock came through the 158.68 level before the opening bell. As you can see, here it made a low at 9:24 a.m. of 158.25. It bounced up, and then that diminishes the probabilities of the same $158.68 level working right after the opening bell. Not that it can't work. In fact, it did work. It just went a little lower than our stop loss, and it did pop back up, making a high of 159.46, and then it came back down. But I just wanted to point out that it changes the risk profile of the trade when it reaches the level right before the opening bell. I saw that taking place. That's why I sent the update about 10 minutes after the original email. I wanted my traders to understand that the risk on this trade changed and that they should really look to the second level. Let's go ahead and look to the second level now. The second support level was 156.64, and you can see what happened. The stock came into that level, making a low of 156.55. The next candle, another low of 156.54, just a few pennies below the level cited at 9 o'clock in the morning. And then just minutes later, we were at a high of 157.54, and we may go higher yet. Another trade where we got more than the minimum profit target. Most likely, we've caught the low of the day on Costco. Most traders, I would assume, are out of this trade, whether they got 50 cents, 75 cents, or they held it or held half. Either way, it was a tremendous trade because it was a no stress trade. It only went a few pennies below the level. Both trades today were stress-free, emotionless trades. Those are the ones we want. If you want to learn how to do this for yourself each and every day, then come over to take a look at the course at LazyGapTrader.com. This is a strategy where you can learn everything you need to know in order to be successful trading the gaps. It's a strategy that you can use for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.